And I would like to introduce to you a dear friend of mine, Yael Tamar. I've had the privilege of meeting them she and her partner, as she is the co-CEO of SolidBlock, a real estate tokenization platform. I am so excited about a particular platform, Yael, but I would like to give you the stage so you can actually address the world about institutional adoption of tokenization. Please go ahead and do your thing, as I will be backstage watching. Bye.
Thank you so much, John, and it's a privilege to be here and to see you here as an added bonus. So hi, everybody. I'm Yael Tamar, and I would love to share any knowledge I have with you guys today. Please ask questions, add them in the Q&A box. I'm going to try to address them and maybe take some breaks during the presentation to address the questions. So without further ado, I'd love to jump into the topic of the asset tokenization. We do specifically real estate asset tokenization, but I'm going to be talking about tokenization as a whole. What is tokenization in general? It helps asset and fund owners raise capital more efficiently, gives investors access to amazing projects, and also provides transparency and liquidity. Now, what does it mean to tokenize an asset? It means two things. Number one, to securitize. Number two, to digitize. At the end of the day, we're issuing a plain vanilla security, which is recognized by various regulatory bodies as security, and the investors are protected as they would be in the traditional security. What is different? Well, digitization is something that came with blockchain, right? So instead of recording the ownership of this security in some database, centralized database sitting on someone's computer or in some sort of a cloud system, instead of recording ownership the old way, we're now recording the ownership on the blockchain. So different platforms use different blockchains. The majority is using Ethereum blockchain, SolidBlock as well at the moment. So we create what's called an ERC20 standard smart contract. A smart contract is a blockchain program that ties your investment to the particular asset. So now that the asset is tokenized, meaning that we have smaller parts of the asset, which is usually actually held through a company and special purpose vehicle that we set up for the purpose. So it's easier to actually record the ownership, right? There is a process for recording the ownership of companies. So we record that on a decentralized ledger. Now we can allow investors to go and trade. They can trade in a decentralized manner over the counter, or they can trade on participating exchanges. So that's how traditional securitization is different from blockchain securitization. Now we're going to talk about why this is the future and why the institutions are jumping on board and what's going to happen and what needs to happen for the institutionals to feel secure in ownership of the security tokens, and what needs to happen for the adoption to take place. So what does tokenization really do? It makes investment accessible. It simplifies transaction. It creates a secondary market, and it enables strategic revenue participation for partners. When I talk about strategic revenue participation, it means that any investor that comes into the primary sale, right when we issue the tokens, is expecting for the tokens to go up in value for various reasons, right? They invest because they expect for the tokens to go up in value. That's the meaning of a security, right? So why would they go up in value? Well, first of all, the asset itself, is expected to generate more income, to grow in value. And specifically in real estate, you see that a lot and you expect that, right? But also we should consider the liquidity. Once the asset is expected to gain liquidity, the asset is also expected to grow in value. So the primary market participants who invest right at the beginning are expecting for the value of the asset to go up as soon as it goes up on an exchange. So think about this, and we're going to take a closer look at that specific point, right? So why right now tokenization is on everybody's map? Why is it so important? Well, number one, there is a huge demand for liquidity. That actually is kind of connected to a demand for crypto. Why are institutions getting into crypto? Well, of course, the revenue, the possibility of increasing revenue is one. And second, it's a highly liquid asset. It's something that they can play with at any time. They can buy, they can sell at any time. And that's very, very important. Now, let's talk a little bit about what made tokenization successful. And if you want to hear about the Jobs Act in depth, I just did a podcast with the father of the Jobs Act, David Wild. It's available on any platform, and the podcast name is Block Solid. So the Jobs Act was something that was enacted by the Obama administration and made privately held companies available for trading. You can trade privately held companies, not only IPOs, but private placements can now be traded. So that's what that act did. That was in an effort to increase corporate, development for small and medium enterprises. So why is this so exciting? Well, because blockchain, on the other end, is the best technology, hands down, for facilitating this sort of trade. So these two things coincided, right? The development of blockchain right after Bitcoin came about, and this act made it possible for tokenization to really soar. So now, and finally, what happened last year? COVID-19. Everything has changed. The way we invest, the way we work, the way we meet, the way, right now we're doing, it's a South Africa-based conference, but I'm sitting here talking to you from Tel Aviv, Israel, right? So one of the early projects that is really a textbook case of tokenization was the Aspen coin, which was issued by Elevated Returns and tokenized by SolidBlock. We did the smart contract and the tech support for this project, right? It raised $18 million, issuing 18 million tokens, and it's now trading on a T0 platform. There are 22 investors at issuance, which included some institutions. Right at the issuance, it blew up to 250, which means a lot of these investors, of course, jumped on the bandwagon. There's 30% premium just after a year and a half, right? So they sold their holdings, and now it's blowing up more and more and more. So this is the perfect example of a trophy asset being accessible to absolutely everyone, and for these initial investors being able to make a really good premium and return. So let's talk about institutions and what happened in the last, let's say, decade in this love-hate relationship with blockchain and crypto, and of course, FOMO, right? One of the biggest factors of crypto investment and blockchain investment is FOMO, and it's not foreign to institutions either. Well, number one, in the last 2-3 years, the reputational risk is now very, very low, right? Almost every big institution is investing in crypto. And a part of the reason why this happened was the huge consumer popularity, right? Their customers, institutional investor customers, such as high net worth individuals, picked up the phone and asked their banker, or why are we not getting on board with crypto? Right? So there is a huge market education going on as well. So you see big players like MasterCard, Tesla, PayPal, JP Morgan, all of them have now, either announced that they're accepting crypto or started investing big amounts of money in crypto. All the top banks use blockchain for their tech systems, and also top investment banks invested in blockchain solutions. So, blockchain, there's no doubt about it, is going mainstream. So the ecosystem specifically for digital assets is growing, really, really fast. And like this, for example, right here is the digital assets capital market landscape with all of these companies that either are licensed to trade digital assets, licensed to hold, licensed to custody, right? They're liquidity providers here, the market makers, banks, and you can see here there's investment funds, investment banks that invest in digital assets. So the ecosystem is really, really big, right? Specifically, companies that have been involved in security tokens, the notable companies, SIX, for example, SIX Exchange is building a security token exchange, Santander Bank settled a bond on Ethereum, Societe Generale as well. There are quite a few out here. Franklin Templeton, a super traditional fund, has jumped on the bandwagon, right? And then institutions like Euronext are investing. Tokeny, which is a security token solution, right? We look at Nomura, Santander and Nomura invest in Securitize. So this is just showing you that these institutions know that this is the future, and they're preparing to jump on the tokenization bandwagon, right? These are just some examples of, again, of different exchanges and custodian services offered, right? Look, I'd be happy to share this presentation. We don't have much time, so you can read through all these different examples of institutional adoption that are just showing, how institutions are believing in the space. Now, what are the leaders in the security token space? Now, I am watching Coinbase with a lot of anticipation. Why? Since 2018, I did a quick video cast about specifically this. When Coinbase bought Keystone Capital Markets, you can see it on YouTube in 2018. I was watching Coinbase and I was looking forward for them to actually start trading security tokens. They haven't done that to date. And I think the reason why is because the regulation is unclear. So we're going to touch up on that. So Coinbase, once it starts offering security tokens, it's going to be off the charts. Now, SIX we already mentioned. T0 we mentioned as a place where Aspen Coin is trading today. Now, there are many other tokens trading. This platform is definitely one of the leaders in the space. Polymath is a great company. It's grown tremendously, providing tokenization services for various types of tokens. There's also security tokens, should be TOKENS, that were issued. New Fund, T0, Blockchain Capital, Aspen Digital, Aspen Coin we already discussed. These are some other security tokens that were very interesting. I urge you to take a look. Take a look at the investment by. We already talked about Securitize, Digital Vault, Spice VC. We didn't talk about Tezos, but they're huge institutions. HSBC invested $20 billion in Digital Vault, right? Take a look at these banks that are just putting money in blockchain-based ecosystems, right? There's Lottery.com, there's Spice VC, Science Blockchain, 22X, which is a venture capital fund that invests in companies from the 500 Startups Accelerator, right? So these are notable security tokens. So why institutions are interested in tokenization? Well, number one is this is touching their core business, right? This is touching their core business. They're adopting crypto, right? And blockchain solutions, as we saw. But what do institutions do? Institutions invest in assets and in funds. That's what they do. This is 98% of their business, right? There's maybe 2% of their business could be touching crypto today or less. So what about their core business? Let's apply blockchain technology to their core business to give them a tool to invest in assets early, to support these assets and lead them until they reach the secondary market where it can be reaching the masses, right? And that will provide an additional revenue source of these institutions. Now, we looked at the R3 study. They, by the way, create fantastic studies. This is a blockchain company, blockchain infrastructure company. And we looked at what they found. This was in 2019, but it's still very, very relevant today. Why? What are the advantages of security tokens? The number one was the immutable ledger of ownership and transaction history. And we talked about that. It's super important to know who owns what to provide people this confidence, right? So again, I'll provide the link to this presentation in the chat so anybody will be able to actually take a look at this, right? So the data is a separate issue. It gets attached to the asset itself, so it's not stored somewhere else, right? So transactional history is embedded in the token, right? So why is this important in general for the market? The private market is so much bigger than the public market. Over 37 Reg D private placements took place in 2017 of 1.8 trillion in capital raised, right? For comparison, global IPO volume is only 180 billion. Compare 1.8 trillion to 180 billion. Now, however, only 22%, one-fifth of institutions is investing in private security markets. Now, why are they not investing? Well, number one is the single biggest impediment to institutional is the lack of secondary market, right? What are we solving with blockchain? The secondary market, right? So this is another chart that shows lack of liquidity in the secondary market as the number two. Now, is liquidity important to institutions? Well, institutions think they do. Institution thinks they do, but mainly the main interesting part in liquidity is the liquidity premium. Is not for institutions, is not the fact that they can divest in an asset, like for private investors who may need money at a certain point. There is a difference between institutional requirement and private person requirement. For institutions, this is liquidity premium, right? This is the extra 20-30% than they can get in on the secondary market when they sell, right? So we have just 3 minutes left. And what can I tell you about it? I just want to tell you about the future. Once liquidity premium becomes clear, institutions will be participating in the mechanism of funding deals on the primary level, relying on the secondary market to provide additional liquidity. This will boost tokenization market as a whole. And I want to show you just one more thing to leave with you. Think about where tokenization will lead the products that the institutions will offer. Institutions, at the end of the day, are financial service providers. Now that we have tokenization, they can build so many more products on top of that. Some of this is new type of lending, new type of aggregation, index funds, ETFs, and so on, right? Liquidity marketplaces, stable coins, NFTs even, right? So there are many, many things that can be done in the institutional investment space. Q&A for the next 2 minutes.
Great. I'll take just one question for you.
Sure.
I'll take just one question for you, or probably two if you have the time. We have about 2 minutes, but only 1 minute each. So the one question that somebody asked here is, where and how do the average investors access, hold on 1 second, access the token? Okay. So is it possible to integrate into companies' persona website and convert or connect to USD and immediately swap to Ethereum? This is where we have fallen short to make it accessible and easy for the average investor to buy and secure. What's your answer to that?
Sure. So first of all, it's on the primary level, it's accessible for platforms like SolidBlock. If you want to find what kind of assets we have, go to marketplace.solidblock.co and you can see the variety of assets we have. You can go to to Securitize and see what kind of assets they have. That's where you can access tokenized securities on the primary level. On the secondary level, you can go to T0, you can go to INX, to several different exchanges where you can, hopefully Coinbase as well, right? So actually, there are marketplaces out there, and I agree with AspenCoin. It was not with AspenCoin, it was not publicized so well. So we got, after a year, we still got requests. How can we get into AspenCoin? So then we send them to we were sending them to T0. So
awesome.
Yeah.
One last question. 30 seconds. In the future, will it be possible to buy a house through tokens? How will the entities used at the moment accept digital contracts? Thank you. So one last question, and that's it.
Sure. Well, if you want to, the reason why you want to buy a house is that you're expecting higher profits, then you can, then absolutely. There are many, many opportunities to buy homes. Even today on Realty, by the way, if you one of the companies that does tokenization, you can invest in a single family home. You can invest in a fund of single family homes with SolidBlock. We have several. But if you're buying a house to live in it, I usually like to say you don't have to buy a cow to get a glass of milk, right? You can go to the supermarket. Tokenization is an example of you go to the supermarket to buy soy milk. You don't have to have a field of soy, right?
Thank you, Yael. Thank you very much, Yael.